Alright, welcome to another series of this particular training. Okay, I'll be taking you on technical analysis, fundamental analysis, and other various things that I have. I'll be taking you on one of the most important parts in forex trading, and it is called technical analysis. Now, this particular topic is very crucial because this is the topic that will help you to generate signals for yourself. What do I mean by signals for yourself? I am actually talking about how you can know when to buy the market and when to sell the market. As a trader, if you don't know when to buy the market and when to sell the market, you're not a trader at all. And you will not just know when to buy the market, you will equally know when to leave the market and when to stay in the market. Okay, so these are the things that we'll be learning in this particular video training. So follow this particular video because everything that you'll be doing in forex trading, they are going to be relying on technical analysis. Okay, now let me jump into the tutorial so that you understand what it is. When we talk about technical analysis, we're talking about making use of tools, yes, various tools to analyze the market. Now, when we talk about analysis, we're talking about looking for possible means or looking for the direction of the market to join the market and make profit. Okay, so when you're carrying out technical analysis, you're making use of tools on your trading platform to analyze the market so you can follow what the market is doing and maximize the profits from the market. Okay, so that is that for technical analysis. I'm going to go into the practical aspect so that you will see everything I'm saying. Okay, now I'll move to the next that I want to talk about. I want to talk about fundamental analysis. It is also another way for you to analyze the market. Okay, but what makes it different is fundamental analysis deals with the news. Alright, in forex trading, we don't just trade technical analysis. You must know what the news is saying because the news has the ability to move the market either forward or backward. What I mean by forward, I mean bullish. What I mean by backward, I mean bearish. I know you know these terms from our previous classes. Okay, so you don't overlook fundamental analysis. So we have two forms of forex trading. Okay, we have fundamental analysis, we have technical analysis, which is the one I just finished talking about. So technical analysis is you using tools, whereas fundamental analysis is you making use of the news to analyze the market. For example, GDPI, if the United States government wants to release their GDPI information news, yes, it has the ability to move the market. So you don't trade because you don't know what the market tends to do, because when the news is released, the market tends to move towards where the news has more impact on. Okay, so the news has the power to move the market to be bullish or to be bearish. Alright, so that is the power of fundamental, and we make use of the website called forexfactory.com. forexfactory.com. That is the website we make use of to know what the news is talking about. We have a lot of websites, but this is the one I personally use. Okay, now when you go into that particular website, any folder that you see that is red and the news is coming up soon, that means that news has high impact on the market. So you should wait and see what the news says before you open into the market. But myself, I am not a fundamental trader. Okay, I am a technical trader. Technical trader in the sense that I do my technical analysis, then watch out for the news and see what will happen. You cannot trade any of them in isolation. You cannot do technical analysis and forget about fundamental analysis, and you cannot do fundamental analysis and you forget about technical analysis. No, both of them, they work hand in hand. These are the two ways that we can generate signals for ourselves. So in this training, we will be depending on technical analysis because that is what is the major way of analyzing the market. All right. So moving away from that and heading to the analysis proper, I want to talk about support and resistance. Okay, this is called retail trading. All right. Now this retail trading analysis, we have what we call support and resistance. I want to explain what support is. Then after that, I will explain what resistance is. Alright, support simply means a particular zone that the market fails to break. Okay, a particular zone that the market fails to break. Now, for example, if the market is bearish, there is a particular zone the market will fail to break that place to continue its bearish movement. Okay, I will go over to the chart and I will show you what I mean by that. So this is what support simply is. Whereas, okay, let me use this explanation so that you understand better, because I love teaching with practical examples for easy understanding. Now, just see support as the ground that you're standing on inside your room. The ground is preventing you from dipping, like the ground is preventing you from collapsing. The ground is driving you or protecting you from not falling down. Okay, that means the ground is holding you not to fall. Okay, so in the market scenario, support tends to hold the market not to collapse. Okay, then resistance is the opposite of support. Just see resistance as the ceiling inside your room that is preventing you from heading over to the roof. Okay, so resistance is a zone up there in the market that does not allow the market to break. Okay, it does not allow the market to break that particular zone, and when it does, the market tends to move very, very fast. The market tends to be very, very volatile. Okay, when broken, the market tends to be very, very volatile. Alright, so I haven't known what support and resistance is. I will go to the charts and I will show you. And I will show you how to draw them. And I will show you why you should draw them. And I will show you how to trade them. Alright, so the next one we'll be talking about here is called trend line. This is called trend line. Okay, trend line, they are technical tools that we use to determine where the market direction will go to, whether the market will be bullish or whether the market will be bearish. Alright, so that is what we'll be using trend line to do. So let me go over to the chart trading view and navigate all these things I have said with any financial market so that you understand it very, very well. Now let's move over to our trading view chart. Alright, this is my trading view chart. As you can see, this is my watch list. Yes, so I will choose any financial instrument like I have up to 7 or 8 financial instruments or 6 thereabout. So I'll be choosing one of the financial instruments. Let me choose AUD USD. Let's analyze AUD USD. Let me use it to show you those examples. Alright, so what you do, you click on launch charts. You know all this. Okay, I have done trading view crash course. I have done trading view crash course. I have navigated trading view. If you've not watched that video, do well to watch the video so that it will be easy on you. Then you click on launch full chart. Then you make sure that your chart is on landscape. Alright, I'm going to go ahead and do that now. Alright, I have placed my chart to landscape. Alright, so this is how the chart is. Remember, you know how to do all this. I have done trading view crash course, so just go and watch the video and you will get more information. Okay, now these are the tools that I use to analyze the market. All right, so I'll go ahead and I will remove them. I will show you. You know what this is? This is position size. I have talked about it in trading view overview and what it is used for. I'll go ahead and I'll delete it. Then I'll go ahead and I'll delete it. So you can see that this is my chart. You can zoom in and have the bigger picture. Always make sure that you zoom in your chart whenever you want to start analyzing. Yes, you can see how the chart is now. This is a bigger picture of the chart. Okay, this is what the market has been doing so far. This is what the market has been doing so far. So if I want to analyze this market now, let me look for a trend line. Okay, let me look for a trend line. I will go over. I can see a trend line from here to this place. Yes, that is a bigger trend line, and I can equally see a minor trend line from here to this place. Now, how do you connect your trend line? You connect your trend line with multiple touches. Trend line is valid when it has minimum of 2 touches. Okay, minimum of 2 touches. I'm going to go to the chart. I will show you minimum of 2 touches, and the next touch that is coming is where you're going to take your trade. All right, so let me open my chart. Let me zoom it out from this zone here. From this zone here, I can see a trend line that the market tends to be following. Okay, so now I'll go over to my tool and I'll pick my trend line tool, which I have taught you about. I'll drop it on my interface and I'll drag it to the left. Okay, now I'll click on it and it will stay on the chart. So you can see how I was able to freely draw a trend line. Yes, it might be difficult for you because you're a beginner, but as you keep on practicing, looking at different charts and trying to find out their trend lines, it will be very, very easy on you. Okay, now let me analyze this. From here, you see the first touch. Okay, the market touched this place with the red candlestick and there is a rejection. The market came back to the trend line and rejected it and came down. Went up again, rejected it, then came down. Tried to reject it again but could not touch it, came down. Now you can see that this is the 4th touch. Okay, this is the 4th touch, and anytime the market rejects a trend line, it tends to go the opposite direction. As you can see, the market touched the trend line, came down, went up again, came down, went up again, came down, tried to go up again, came down. Here is the 4th one and it's coming down. Okay, you can see how the market is moving. So this is how to draw your trend line. So your trend line is not valid on only 1 touch. It must be valid from 2 touches. Okay, now how do you trade a trend line? Yes, in my next class I will be teaching you candlestick. That is how you trade your trend line. We have different types of candlesticks. Okay, so I'll be teaching you candlesticks so that you will know and understand how to enter the market and when to leave and when to stay in the market. All right, so now having done this trend line, you just plot it on your chart and leave it, then allow the market to come to it. All right, so that is trend line. You can see that whenever the market comes to the approaches the trend line, there is a rejection of price to the downside. So in a bearish scenario, that is how it is. Whereas in a bullish scenario, it will be whenever the market comes to the trend line, it will go over to the bullish side. Okay, now let's look at the chart and see if we can see on that trend line. Okay, I can see a bullish trend line here. You know, bullish means when the market is going up. I can plot it from here and I have how many touch. Alright, okay, you can see that I have 1 touch here. Wait, let me plot it very well so that it will touch the trend line. Yes, yes. So now I have one touch, I have two touch, I have three touch, I have the fourth touch. So you can see that this is a bullish market, whereas this one here is a bearish market. Okay, now whenever the market comes to the trend line, the market tends to reject from that price and continue going up. Okay, then over here, whenever the market comes to the trend line, the market tends to reject the price and continue going bearish. You can see the difference, right? I've shown the trend line in a bearish market and a bullish market. So now, how do you trade this trend line? In my next class, I'll be teaching you on candlestick. Okay, now for me to trade this trend line here, there is a bullish candlestick. Bullish means the green candlestick. Okay, when you do candlestick charts pattern, you're going to understand this video very well. Just follow me straightly. Okay, you understand better when I have given you the class on candlestick. All right, so immediately you see the bullish candlestick, you enter the market, you automatically be in profit. Look at it here. Then the same thing goes here. The bearish came down and touched the trend line and could not continue going down because the trend line is acting as support now, and there is a bullish candle that starts going up. All right, so you enter the market, you're already in profit. The same thing happens here and all that. So these are ways that you can enter the market. All right, now let's look for support and resistance, which is the next thing that we talked about in this video. Okay, I think I have seen a support here and I've seen a resistance. So I will pick my horizontal 2, which is my rectangle 2. Okay, I'll keep it on my chart and I'll plot. All right, I'll plot from left to right. Okay, then if I want to take the exact size of this, I will just clone it. I'm sorry about that. I'll clone, then I'll bring it. Let me bring it a little. I just want to get something right here. Okay, use your hand to arrange your horizontal line. I'm just trying to teach you what you will be doing. Then you move it, and you move it and keep it here. Yes, you have your horizontal line, which is your support. I'm just trying to make it very fine so you understand what I'm trying to teach you. Alright, so as you can see this chart now, okay, this market has been ranging. Alright, remember I told you that we have a trending market, a market that is trending upward or downward. Then we have a ranging market that is not trending upward and it is not trending downward. It's just moving inside a box. Okay, that is what this market is, and you must know how to trade different markets. So when you see market like this, you tend to trade support and resistance. Okay, so at the top here is our resistance. Remember I told you when I was explaining in the theory aspect that resistance is up there, that is stopping the market to break and continue going up, whereas support is a zone at the bottom of the market that refuses the market to break and continue going down. So the market tend to come to this zone. Resistance rejected the market, and the market tried to push down a little, could not, went back to resistance, could not sustain, came down to support. Are you seeing it? Then moved back to resistance, could not sustain there, market rejected to support. It's just ranging boundaries. Okay, the market is ranging between boundaries, came down again to support. Now over here you can see another level of ranging, mini support and resistance. You can still draw it, but I don't draw it like that. I only follow the major ones. The market stopped coming to the resistance, and what happened from here? The market broke the support. Okay, when the market broke the support, the market came and tested the support again. Market broke support, came and tested the support and started coming down, and that is where you have this maximum downtrend here. I hope you understand that. Now in a case whereby the market does not break support, when you see a ranging market like this, the market is tend to break from either of any of the zone. So the market can break from resistance or it can break from support. As this case may be now, it broke from support. So how do you trade this kind of market? You wait for the break, or you wait for when the market comes to resistance. As you can see here, the market came to resistance and painted a bearish candlestick. Okay, if you enter the market, you must have been in profit from this place down to the support before the market tend to go up again. So, and you can see the market continues like that until the market finally broke from this zone here. And when the market broke, the market came, tested this particular zone again to check if that zone is very, very strong. Then the market went down all the way. So you can see all this, they are massive profits. Then from here, the market tends to go up as a painted trend line. Okay, so the secret of technical analysis is, if you know what you are trading, you wait for what you're trading to appear in the market. You don't force the market to paint what you're trading. Allow the market. One of the tool that we have in our arsenal as traders is patience. You must be patient. Okay, you must wait for the market to perform its duty. It's for you to see that yes, this market have done this market have done that. Then you come in and you enter the market. All right. So remember, we buy at the support level so that the market will go high, and we sell at the resistance level so that the market will come down. Because if you buy at the support level for the market to go up and the market starts going down, you will be in loss. Okay, if you sell at the resistance level for the market to come down so that you'll be in profit and the market start going up, you will be in what? In loss. All right. So these are the major tool that we use in analyzing the market, in knowing where the market will go to and what will happen to the market. As this market is now, this is where the market is currently trading. Let me show you. As at when I'm making this video, this is where the market is currently trading. And you see that the market fails to continue going bearish. That is to tell you that there is every tendency that this trend line might be broken. Okay, let me extend it. Okay, I have extended it. So if this market, let me zoom out so that you understand better. If this market here, this red candlestick turn to a bullish candlestick which is green and start coming to the support, and if it breaks this, sorry, I don't mean to say support, to this trend line, okay, resistance, if the market comes to this trend line that is acting as a resistance and breaks it, that means the downtrend is over. Okay, because it's a downtrend market. You remember when I started this video, I mentioned it. So it is over. So you start looking for buying opportunities. If this candlestick breaks this zone, okay, you start looking for buying opportunities. Do you understand that? So these are the things that you need to know in technical analysis, because as we move on, these are the things that we are going to be using to be making money in the market. If you don't understand it, I bet you cannot generate money from this market. So this is the advanced part of the forex trading. I'll be making more videos concerning how you will enter the market and about candlestick chart so that you understand better. But for this particular technical analysis video and fundamental analysis video with support and resistance and trend line, I will bring this video to a close here. Alright, in our subsequent videos, do well to understand everything that I have taught in this particular video. So this is the market which you know, and I have taught you where to look at for signals and what to do and how to draw it. Okay, now let me say this before I wrap up this video concerning support and resistance. Resistance is valid when the market have rejected that zone twice. It is valid when the market have rejected that zone twice. Then support is equally valid when the market have rejected that zone twice. So when the market, when you notice that the market have rejected those zones twice, you just wait, draw the zones and wait for the market to return there. When the market return there, then through your price action signal that I'm going to teach, which is candlestick, you're going to know when to enter the market and when to leave the market. All right, that will be our next class. Thank you, and I will see you in the next video.